Hello everyone, and it was another stalling out day for US stock markets on Friday. A little bit of energy in Asia today, but I really don't see that continuing to last. I still feel there is an overall rolling over of asset values going on here. It will begin to happen in the US housing market. It doesn't mean a crisis, but certainly a flattening out to housing prices in the US. We've seen it in every other aspect of US housing data. The big news on the day really is the official Manufacturing and Services PMI, which have both dropped reasonably sharply, still just in expansionary territory for manufacturing, a little bit stronger in the services sector. But again, just confirming that the world has had its pandemic crisis, the worst of it, and then it's moved to a situation of rapid rebound, giving the feeling that this is just the strongest growth ever and the world's never been in a better place, but that isn't true. What it has been is simply bouncing back to where we were before. So PMI data in China is confirming what we've all been suspecting for a little while now, that China is slowing back, and it most certainly is. But it's not a crisis either. China's growth rates have always been very, very high, and we can expect that to continue to be the case. So a new normal won't be quite as good as what it was pre-COVID, but it will still be pretty good. In the US, it's a bit more of a mixed state-by-state situation there. Certainly Delta around the world is causing problems. Israel have just started going to third Pfizer shots to try and keep the immunity up against Delta. So it is an ongoing struggle. It's not the problem has been solved situation, as so many people like to believe. I wish it was the case, but it is not. So we have to understand that if we're going to accurately predict the economic impact going forward. And it does look like there is going to be softening, but still ongoing, rolling supply chain disruptions. Currency markets, the US dollar will still be strong in that environment because US corporations will want to repatriate funds, and the rest of the world wants to invest in the US, seeing it as relatively safe and organized compared to their own country perhaps. And as I've said before and in the written pieces, massive inflows at 1992 levels to the US at the moment in terms of capital inflow. The Australian dollar remains, I think, severely overpriced, still targeting 70 cents. Bounces are good places to sell. Afterpay in the Australian market's been up about $20. That's because Square has decided to buy them for a whopping $39 billion. I'm trying to catch fish at the same time. Sorry, multitasking. So for $39 billion, and this is a company that's never made a profit. So it just goes to show you don't have to make a profit to get rich in this new modern high-tech world. So Afterpay, I think, will have a little bit of a run. Clearly, they're probably going to have the sort of management and backing now that can grow them into a truly successful global company, but they might be more like an Uber. That is, they grab incredible market share, but never make a profit. And for Uber, it's something like $25 or even $30 billion later, having been poured into the company, they still haven't made a profit. So the outlook for Afterpay is very mixed. It's certainly going to have greater capabilities, but the business model so far hasn't produced a profit. In terms of the Australian stock market though, very firm on the open today. The Afterpay is a big boost, of course, to confidence, but we're looking at increasingly high numbers in New South Wales for COVID. Over 200, or it's around 234 people now in hospital. The health system's starting to say, well, we do need to pay more attention here. So this is not a perfect scenario at all. It is possible New South Wales lockdown will be extended. Queensland's lockdown has already been extended, and that's beyond their equivalent of the Easter show for Sydney people, beyond the Ekka in Brisbane, which I used to like going to when I was young, actually. Fond memories there, but that's been cancelled because the lockdown in Queensland's been extended. There are still cases in Victoria. I'm not saying it's a probable scenario, but it is possible that Queensland, New South Wales, Victoria could all end up in simultaneous lockdown, and that would not be good for stocks. So I continue to highlight the great benefits of having CFDs as a hedging tool against your other investment portfolios. And that's something to really, I think, be focusing on moving forward. And it's always better to be prepared than wondering what to do in real time. For the moment, the US stock market, Dow Jones, S&P, they're going to be bouncing around. It's unsure it's a top. It's unsure if it's a continuation pattern, but certainly we're in some kind of stalling consolidation phase here for all of the major US indices. Thanks very much. I'm Clifford Bennett, Chief Economist, ACY Securities, wishing you well for the rest of the trading week.